Hello, this is Stephanie Thomas on behalf of ComplyRight. As a follow-up to our webinar on ACA reporting, we have Stacy Barrow, benefits attorney and ACA expert, here with us to answer some of your pressing questions about employer reporting of the 1095-C. Stacy, thank you for being here with us. I'll let you get started on the questions from our webinar attendees.
Thanks, Stephanie, and good afternoon, everyone. It's Stacy Barrow here from Mathis, Barrow & Weatherhead in Boston. And let's jump right into our follow-up questions. And I'm going to read the question and then give the answer. First question is, what if an employee goes out to get coverage in the marketplace when the employer clearly offers the required minimum essential coverage and minimum value coverage under the ACA? Is the employer still subject to the penalty? Is the penalty $2,000 per person? And if you are offering affordable minimum value coverage to your full-time employees, and there's someone that manages to get a subsidy, you should not be penalized in that situation. You'll be able to respond to any inquiry from the IRS saying that you did in fact offer coverage, and really your reporting, the ACA reporting, will show that at least you're representing that for this employee you did in fact offer coverage, and so you shouldn't be exposed to any penalties. And there will be times when employees rightfully get a subsidy even though the employer's coverage might be, quote, affordable under one of the safe harbors. It's rare, but it could happen, and the IRS understands that. And so there should not be any penalties in this situation. Next question is, how do we report part-time employees who are under 130 hours per month for all 12 months? Or do we report part-time employees? And the answer is no. In order to trigger a reporting obligation, the employee has to have worked full-time for at least 1 month, whether it's based on the look-back method or if he actually just worked 130 hours in 2015. So this person, assuming they didn't enroll in coverage under a self-insured plan, would not receive a 1095-C from the employer that year if they worked under 130 hours every month in 2015. Again, assuming that they weren't required to be treated as full-time under your measurement period, like you didn't measure them in 2014, it turns out they worked full-time, and so you're going to treat them as full-time for 2015. In that case, even if the hours reduce, then they would still have some months of full-time employment in 2015. Next question is, how are on-call employees who are paid a flat amount per shift counted? Example, weekend on-call for phones. There's not a whole lot of good guidance or helpful guidance out there for employers. One of the things we talked about on the webinar was how to credit hours of service for employees who are not paid hourly. And the answer on the slide was that if the employee shows up to work for an hour, you credit him with 8 hours that day. So, if you have employees working on the weekends, answering the phone bank, you're probably going to have to credit them with 8 hours a day for each day that they work. Otherwise, you'll have to come up with some reasonable method for crediting hours of service that actually reflects the time worked. And so that's a factual determination that should be made with counsel. Otherwise, you just credit 8 hours if the employee shows up for 1 hour. Next question is, what code is used for an employee who is hired during the month and is not eligible for coverage until the following month? And that one is straightforward. It's code 1H in line 14 and code 2D as in dog in line 16. You're basically saying we didn't make an offer of coverage for the full month because he was only hired mid-month, but we don't get penalized because the employee is in what we call a limited non-assessment period, which is kind of like a waiting period. So the answer is 1H and 2D for that question. Next question is, how do I account for employees that are full-time some months and not full-time other months? And so this company sounds like it might be a good candidate to use the look-back method of determining full-time employment, and that allows you to average hours over a 12-month period to determine full-time or not full-time status for the upcoming year, and so it gives the employer some stability for employees whose hours may vary during the year. Next question is, what if you are partially self-insured? I'm not exactly sure what that means. That's kind of it's a little bit vague there, and so I really can't give a whole lot of insight on that. I guess I would say ask your carrier if they're doing the reporting forms as a fully insured carrier or plan, and if they're not, then you're treated as offering self-insured coverage, and you'll have to do the forms yourself as if you were a self-insured employer. Next question is, what if you offered insurance to an employee but they are still covered under their parents' or spouse's plan? How does this affect line 16? You could just leave it blank because you know the employee is covered under a spouse's or parent's plan, or if coverage is affordable, then you would use the regular affordability safe harbor that you would use for other employees who decline your offer of coverage. Next question is under line 16, do we leave it blank if an employee has waived coverage? How do we document a waiver? You may leave it blank if the employee waives coverage, but if you can, you want to use a safe harbor code. You want to show the IRS that there's a reason why you shouldn't be penalized even though the employee waived coverage. Were you offering coverage that's affordable? And if so, then you want to use an affordability safe harbor if at all possible. In terms of how to document a waiver, you can use declination forms, request that employees sign a declination, kind of rely on your own practices to say, look, we offer an open enrollment period, it's 3 weeks long, and if they don't respond, then we treat that as a waiver. There's no real requirement to collect waiver forms from every employee. We recommend it as the best practice, but it's not strictly required, and some employers are just simply not going to do that. Next question is, I have some employees we've been paying medical coverage on, but they have never filled out the paperwork and returned it to insurance to actually be covered. What would I put on their forms? It's kind of a factual situation. I guess if they're enrolled, then you can put 2C. I don't know if they're really enrolled or not. If you're paying the premiums, does that mean they're covered? Or, that's I guess a question that requires a little more detail. Next question is, are owners of a business considered employees if they are receiving a salary from the business? Generally, no. If they are greater than 2% owners of an S-Corp, or they're members of an LLC, or they are partners in a partnership, then they're generally considered owners and not employees. So even the 2% or greater owners of an S-Corp who are receiving a W-2 along with their K-1, they should still be considered owners and should not be treated as a full-time employee for ACA purposes. Next question, our health plan runs from June 1st to May 31st. Should I be using the relief codes from January through May of 2015? And the answer is, if you qualify for non-calendar plan year relief and you need it, meaning you weren't offering coverage to full-time employees until June 1st of 2015, and on June 1st you did in fact make an affordable offer of coverage to your full-time employees, then you can use code 2I in line 16 whenever you have a full-time employee that you didn't offer coverage to. There are some hoops to jump through for that. It's not automatic that you qualify. You have to have offered coverage to a significant percentage of employees. It gets a little granular, and I'd be happy to follow up with you if you'd like to reach out and engage further on that one. Next question, can you enter all 12 months even if the employee is not employed for every month? And the answer is generally no. And you have to be accurate with the reporting. And if you're saying that if the employee was only offered coverage for 6 months, you couldn't put down that he was offered coverage for all 12 months. Of course, if he was working for 6 months but he was never offered coverage, then you could use the no offer code for all 12 months because that is still true. Okay?
Stacy, that is all the time we have for questions. Thank you so much for your insightful answers to our attendees' questions today. And if you are looking for further assistance on ACA filing, please reach out to Stacy Barrow or visit complyright.com for further engagement. Thank you and have a great day.